Silver has been on an incredible run, surging 147% and flirting with a new all-time high. But don't let the rally fool you. The market is flashing the exact same warning signs that came right before the biggest crashes in its history. We just saw a brutal 26% single-day crash, which tells us extreme volatility is back with a vengeance. In this video, we're going to pull back the curtain on the hidden risks that could make a fortune for some investors and completely wipe out others. And I will show you the one key signal that will tell you what what's coming next. Lately, the price action has been just plain wild. After hitting a record of around 121.88 in January, silver got slammed with violent sell-offs, including a 20% drop in a single week. This isn't how a normal market behaves. It's a sign of a massive tug of war happening behind the scenes. On one side, you have the paper markets. This is where speculation and margin calls can trigger huge price swings out of nowhere, like that crash on January 30th. This is where unprepared investors get wiped out. But on the other side, the physical market for actual silver bars and coins is telling a totally different story, a story of unprecedented scarcity. For the 6th year in a row, the world is physically using more silver than it can mine, creating a massive structural supply deficit. This conflict is creating a total fog for investors. Forecasts for 2026 are all over the place, with some analysts calling for a drop to $41 an ounce and others predicting an explosive move to $300. That ridiculous range just shows the extreme uncertainty gripping the market. And ignoring this volatility is a huge mistake. Silver's market is much smaller than gold's, which means it's far more volatile, amplifying both your gains and your losses. So how do you possibly navigate this chaos? You stop getting distracted by the daily noise and start focusing on the tectonic shifts happening underneath the surface. The solution isn't trying to guess the price day to day. It's understanding the two core drivers that will ultimately decide where silver is headed. First, that structural supply deficit. I mentioned we've been using more than we've been mining for 6 years straight. The shortfall over just the last 5 years is a staggering 820 million ounces. And miners can't just flip a switch. It can take anywhere from 7 to 15 years to bring a brand new mine online. This isn't some temporary squeeze. It's a long-term supply crisis in the making. Second, and this is the real game changer, is the explosion in industrial demand. Industrial use now makes up about 60% of all silver consumption. We're not talking about jewelry or silverware, we're talking about 3 unstoppable technological megatrends. 1, the solar energy revolution. Solar panels are absolutely devouring silver. Back in 2014, solar was only 11% of industrial demand. By 2024, that number had surged to 29%. And get this, the newest, most efficient solar cells actually need more silver, not less, canceling out any efforts to use less of it. 2, electric vehicles. An EV uses up to 79% more silver than a traditional car, with every single vehicle needing between 25 and 50 grams. By 2027, EVs are expected to become the main source of silver demand in the auto industry. 3, artificial intelligence. The AI boom runs on data centers, and data centers run on silver. Global IT power capacity has already exploded over 5,000% since the year 2000, and Goldman Sachs predicts that power demand just from data centers will jump another 165% by 2030. Silver's conductivity is simply irreplaceable for AI chips and all the infrastructure that supports them. This isn't speculative maybe demand. This is structural locked-in industrial consumption from the biggest growth sectors on the planet. If you're getting value from this breakdown and it's helping you cut through the noise, make sure you subscribe to the channel. We put out data-driven reports just like this every single week to help you stay ahead of the market's biggest moves. So what does all this mean for the future of silver? The battle between the volatile paper market and the hungry physical market really defines the two paths from here. The key signal to watch is how the price behaves at 2 critical levels. The first major support level is right around $70 per ounce. This is the floor where the price found its footing during the recent sell-offs. If silver can hold this line, it's a strong sign that physical demand is soaking up all the selling pressure. That would mean the market is building a base for its next leg up, potentially targeting those bullish forecasts of $150 or even higher. However, the second and more critical level to watch is $55 per ounce. A clean break below $55 would be a major red flag. It would suggest the bears are in control, potentially ending the current bull run and opening the door for a much deeper correction, bringing those more conservative forecasts back into play. The big takeaway here is that silver is no longer just gold's volatile little cousin. It's a strategic industrial metal sitting at the heart of the world's biggest tech revolutions. The incredible demand from AI, solar, and EVs has created a fundamental supply shortage that simply cannot be ignored. But the road to new highs is going to be incredibly rocky. Fortunes will be made, But anyone who ignores these warning signs and fails to manage their risk could face devastating losses. The real question isn't if silver will make a big move, but whether you'll be prepared when it does. And if you want to see our deep dive on the gold to silver ratio and what it is predicting next, click to watch this video right here.